Okay, we're looking at NVIDIA, and this is the top here, 974 on March 8th. The question is this really a top? Well, we do have a bearish engulfing pattern, and you can see here the price action from Friday engulfs the prior day's action from Thursday. That's usually a bearish pattern, and if you get follow-through selling on Monday, that confirms that this pattern is calling a correction. So if you think about candlesticks, a 3-day pattern, one Thursday, Friday is the second day. The third day, you need that confirmation. You need confirmation that the bearish engulfing pattern is actually calling a top. And for that, you need a lower close, ideally on high volume, to get this thing started. So how does that fit with Gann? I think it works very nicely. I think using the two together is useful. And the reason I say that is because right now, if you look at the square of 9, you see that high was 974. And 974, if you line it up, it actually lines up perfectly with March 10th. That's a Sunday. So you could argue that it's either, 974 would be perfect for Monday the 11th or Friday the 8th. I think it works with Friday the 8th. Also, you can see 973 lines up with March 7th. So, it's probably closer to 974. What you're trying to do is get time, which is on the perimeter of the square of 9, to line up with price, which is these numbers on the inside of the square of 9. Here's the square of 9. You're familiar with the square of 9. When time and price line up, they're said to be in conjunction. If it's opposite, then you would say time and price are in opposition to each other. Either way, there's a good chance of a top, whether you're in opposition or in conjunction. So what I would say is that nothing is ever guaranteed. This may not work, but 974 looks good to me because it lines up pretty close to March 8th. And also, like I said, because we have that candlestick pattern, the bearish engulfing pattern, calling for a top on Friday, as long as we get follow-through selling on Monday, we can be reasonably certain this thing is starting a correction. The other thing you might notice is that from this low here, back in January 3rd, we started the year, and where were we? We were at around 973, so we're more than twice that price into the high. So 973, that's a pretty big, run up in the space of a couple of months. So basically, January, February, a little bit into March, and we doubled the price in that short span of time. Basically, you can see this thing's gone vertical. Now, if you were to draw a Gann line, a 45-degree line would be out here somewhere. This thing is almost vertical. So one of the nuances of Gann is that the steeper the slope, the less sustainable the rally. And the reason Gann looked at 45-degree lines, the one by one, is because it's more sustainable. If you see a market or a stock rallying vertically, you're getting closer to the end of the rally. It doesn't mean that you can pick the top. Sometimes you can't. But it means that you should beware that it's very risky to own a stock that's gone vertical. And that's just common sense. A parabolic move up, you're getting close to the end of the rally. And the big thing that I would point out is this is the second tech stock bubble, and you should be looking for a hard landing, not a soft landing. If you think back to Amazon in the first tech stock bubble, it didn't disappear. It came back, and you can see Amazon succeeded like unbelievably, but it didn't stop it from crashing. And a lot of people will argue that, hey, NVIDIA's got so many back orders that it's just going to, they can't even fill the orders that they have. There's no way it'll sell off. That's sort of a fundamental argument that, look at the demand for the product that they're selling. Well, I would argue that, hey, if you look back to Amazon, great company, at the birth of the internet, they were there and they didn't go away, but they suffered a huge correction. So just because, they've got great demand for NVIDIA, doesn't mean you can't have a correction, right? Same thing with Amazon. Just because they were doing great guns to begin with in the late 90s, it didn't stop the correction from happening. So, and if the Fed wants to tell you that, hey, it's a soft landing, my rebuttal would be that, hey, you didn't get a soft landing from the first tech stock bubble. Why should you expect a soft landing from the second tech stock bubble? If this thing is popping, it'll be a hard landing, not a soft landing. That's what I'm trying to get across, is that don't expect it to be a soft landing and look for a hard landing. When there's no such thing as a gentle, soft landing when you pop a tech stock bubble. You get a hard landing. So I hope this is helpful. Thanks for your time.